Infinite banking is a very popular financial topic and strategy that always seems to be surrounded with great controversy. So in today's video, we're going to take a closer look at why it is considered to be a scam by many individuals, including popular financial advisor Dave Ramsey. We will dive into the common reasons that individuals typically mention when referencing the strategy as a scam, and break it down to help us determine whether their logic is valid. Be sure to stay to the end of the video to hear my own personal conclusion and whether or not the strategy is something that I would potentially use for myself. So before we dive into the argument on why infinite banking is considered to be a scam by so many, let's first look at a quick overview on what the concept actually is. Infinite banking is centered around a whole life insurance policy, and within one of these policies, the policyholder will build both cash value and death benefit. The death benefit is of course the amount of money that one's beneficiary will get when they die, and the cash value can be thought of as equity within one's policy that they can borrow against. The concept of infinite banking revolves around the cash value, which is the component that is used to create a personal banking system. Policyholders can then borrow against this cash value instead of having to go to a traditional lender such as a bank or credit union. The strategy has some key advantages such as tax-deferred growth, liquidity, control, and asset protection. So why is it considered a scam by many individuals, including Dave Ramsey? Well, let's take a closer look. The argument first breaks down insurance companies into two buckets, stock and mutual. From a simplistic level, stock insurance companies are owned by the stockholders and mutual life insurance companies are owned by the policyholders. In the case of Dave Ramsey, he focuses his argument around mutual life insurance companies where the policyholders own the company. And so each year, these mutual life insurance companies typically pay a dividend to their policyholders. And this is really the core piece that the argument that infinite banking is a scam is centered around. The idea that since policyholders are the owners of the company, when a dividend is paid, they are essentially just receiving back their own money because the company took too much of their money to begin with. Then when a policyholder wants to take out money against their cash flow, they must pay interest on that borrowed money. And some individuals, such as Dave Ramsey, argue that they are just taking your money and then making you pay interest on it when you want to access it. So without any additional context, if infinite banking is framed in this way, it is easy to see why many people would immediately consider it a scam. However, let's provide some additional context to really better understand how the concept works. Firstly, one important piece of context is that life insurance companies can have cash to pay dividends from other sources of income and not just from overpayment on whole life insurance policies. They can also make profits from other lines of businesses such as critical illness, group benefits, and term insurance, meaning it is not an accurate assumption to just say that the dividends are coming from an overpayment in whole life insurance policies. As well, life insurance companies typically invest the funds they receive from policyholders into various investment vehicles and projects. The premiums paid by policyholders, which are a primary source of income for life insurance companies, are invested to generate returns and help meet their financial obligations. These investments are often made in a wide range of projects and asset classes that may not be readily available or accessible to the average individual investor. Secondly, the argument states that individuals are paying interest when they borrow against their policy, and since they are the ones funding the policy, they are basically just paying interest on their own money. But a key point to note is that they are borrowing against their policy, meaning they are not actually taking money from the cash value of their policy, but rather borrowing against it. For example, another common asset that people borrow against is their home. Typically by leveraging a home equity line of credit, also commonly known as a HELOC, individuals are able to tap into equity in their home and borrow against it. And so what happens to the growth of their equity in their home when they take out money using a HELOC? Well, it's unaffected because they're borrowing against the equity in their home and not actually pulling from their equity. So when these different arguments are made with little to no additional context, it's easy to see why people immediately call the concept a scam. But when looking into it with more detail, it's clear that it's not fair to just call infinite banking a scam. As well, considering the large amounts of money that the wealthy and banks pour into these life insurance companies, it's pretty apparent that it's not just a flat-out scam. With that being said, it does not mean the strategy is for everyone. I personally believe that infinite banking can be extremely powerful if used with the correct individual in the right situation. That is why it's important whenever looking at any financial strategy like infinite banking to do extensive research on how the strategy actually works and if it is suitable for your current financial situation and goals. For myself, personally, given my current situation, I do not see infinite banking as a suitable strategy at this given time, as I believe my money is currently better off being placed in alternative investments. But as I continue to grow my capital, it is a strategy that I will likely consider at some point. That is all for today, but if you did find this video to be helpful, it would be greatly appreciated if you could give this video a thumbs up and consider subscribing to the channel for more everyday financial content. Thank you for watching, and we'll see you next time.